All right, traders, it is time to prepare to trade the best setups at the best prices. We have an amazing trading plan for tomorrow, and I'm going to be walking you through step by step how we are planning to make money buying call options at key oversold levels. I will also be sharing with you our key levels to buy put options. Heading into tomorrow, though, they will likely not hit because we're going to be focusing on the more overbought levels. So those will be more for later this week. Let's get straight into the analysis. So, in terms of the SPY, we are approaching key oversold support that has not been tested. And if you've been studying the trends on SPY, it tends to bounce first, even if it were to go lower, and even if the trend were to be bearish, it tends to bounce first at those key oversold levels. So I'll be sharing with you those levels where we're interested in scalping calls very, very quickly, barely out of the money or at the money, and sell them right back in the money. But in terms of the daily chart, based off of what I've seen. So I always look at the daily chart and I always try to identify if there's some sort of pattern. Sometimes there's a pattern, sometimes there's no pattern. But based off of what I've seen, when SPY has this green gap up right here and then has a big red day after that, based off of what I've seen, this is what it's going to try to do. Now you have to understand, I'm not saying it's going to do this. If I was saying it was going to do this, I likely would have swing traded. But even if I thought it was going to do this, I might not have swing traded because it doesn't meet my risk to reward. It doesn't, it's not a good level for puts in a sense. But this is what you need to understand. Look at this red bearish candlestick right here. Compare this left side to this red bearish candlestick right here. You can visually see they are nearly identical. What happened the next day? The next day, SPY ended up gapping down. And then once it gapped down, it ended up selling off towards the market open. And then it had a bullish recovery and a bullish trend day throughout that day. So based off the pattern that I'm seeing, if this history were to repeat itself, the SPY is supposed to gap down. And then once it gaps down, it's supposed to have an overall little drop. And then it's supposed to have a bullish recovery trend day. So me knowing this information, I will be going into the market with a game plan for call options. Now, in order to confirm that history is going to repeat itself and to give me confidence in that overall pattern, what would be the first step? The first step in the first phase would be SPY needs to gap down, or SPY just needs to sell off towards market open. If one of two, or ideally both of those things happen, that gives me more confidence to be buying call options for the bullish recovery later on throughout that day. So those will be the confirmations that I'm looking for. If I get it, then I'll be extremely interested in call options. If I don't get it, I will still be interested in call options at my oversold levels, and I will still wait for put options at my overbought levels. I refuse to buy puts at key heavy support. I'd much rather just sit on the sidelines, wait for a better opportunity to buy call options, even if I'm going against the overall trend. I ended up doing very, very well on Friday, trading against the overall trend on a very, very bullish day, scalping. So imagine how well I'm going to be doing on Monday when we're at better levels and I'm already seeing a great pattern that can plan out. We just need to gap down or sell off towards market open for that pattern to give me confidence that's going to repeat itself, right? So what are the levels for calls? Where are we interested in buying call options? Very, very simple. What we're going to do is we are going to go back throughout the 30-minute chart, and we're going to be identifying the key support levels that have not been tested to be buying call options. So these are the levels. Heading into tomorrow, this will be our first level of interest to be buying call options. $441. 440.90. This is key support that has not been tested. You can see it created several bear traps where SPY had some nice quick spikes to 443.20 very, very quickly, which is currently the previous closing price. So the point being is when SPY hits 441, or if it goes under 441, they're going to try to bring those calls back in the money. You buy them at the money, you buy them out of money, you sell them straight back in the money very, very quickly. You can see how fast it's going to try to pop when it hits 440.90. Within 30 minutes, history shows this can go to 442 very, very quickly. Within 1 hour, this can go to 443 towards that previous closing price. I don't hold my hopes. I sell very, very quickly at profit targets. I scalp like a sniper. That is why I'm successful, because I do not hold my positions for a very, very long period of time. I'm not like these other traders who will be up 20, 30, 40% on 0 days within 5 to 10 minutes. And then they flip red, give it all back, turn their big win into a big loser holding their hopes. I used to be in that situation, but I've learned to change for the better. Thanks to surrounding myself with the right network, Traders Society. People taught me within that group to just sell and take profits very, very quickly. That was the game changer for me, because I would always turn my losses, I would always turn my wins into big losers. Whenever I had a nice win I was holding, I would always turn it into a big loser, trying to aim for that bigger win. Ended up getting me trapped for a bigger loss. So 440.90. 440.90 is our first level of interest to be buying call options. Now, our next level is going to be a special level. SPY likes to reverse at the gaps, especially if it's an oversold gap or an overbought gap. It wasn't too long ago. I was telling you guys to buy put options at this gap right here at 451, which was the exact top. And then as you can see, once SPY closed that gap, the overbought gap, a key resistance level, best level for puts, I told you guys, it had a massive sell-off, dropping over 7 points. So we are now approaching a key oversold gap. If you look at the chart right here, we have a very strong key oversold gap at $440. It has not been filled yet. That is where I'm extremely interested in buying call options. And another thing I'm going to add for those of you who are interested in swing trading, based off this daily pattern, you're going to want to remember this heading into tomorrow, right before the market closes. If the SPY does gap down, if we do sell off towards market open, and then it has a bullish recovery, you are going to want to show a little interest in potentially swing trading some call options. You can see right here this pattern, big red bearish day, big red bearish day. If we start off bearish in the morning and then has a bullish recovery, what happens the next day? The next day, it had a very, very nice green day. So that is what you are going to want to do in a sense. You're going to want to be swing trading call options if the SPY closes strong tomorrow, if it has a green bullish candlestick. Take a nice starter on swing trading calls. And then if it dips in the morning, like it did right here, you can add to that position. That's another trade idea I have for you. Wait until the market closes to take advantage of that opportunity. If it's there, then you can seize the moment if you want to take that risk on the swing trading. Now, in terms of the next play, if we go under 440, I would say it would be very unlikely that we go under 440 tomorrow. But if it were to happen, our next key level for call options will be right here. Let me go back further throughout the chart. Normally I don't go this further back, but that's just the situation we're in with the current market. So right here, this will be the next level. We will be keeping a very, very close eye on 438, this 438 zone to 437.50. That'll be our next overall level. Those are the levels for calls. Those are the levels of interest. That's the game plan heading into tomorrow. Now, let's discuss the price ladder. The price ladder is a support and a resistance zone. So basically, if one of these levels reacts as a support, the SPY is going to spike up to the next level. If one of these levels reacts as a resistance, the SPY is going to go down to the next level. We trade one level at a time. Not every single level and bracket is created equally. Some have poor risk reward ratio because they're in the middle or because they have a very tight channel in a sense, right? So they're not all going to be big moves. Those are my levels for calls. Those are the best steps, best prices. Now, here's what we need to understand. In terms of the market, where we are at right now, you can visually see this is where we're at. So this was previous resistance at 443. The SPY went above 443 and it had a massive move to 453. So this used to be previous resistance. Then once it came back down, it reacted as support, which is why we're buying calls, because when SPY creates a massive, bear trap, and it has a massive breakout, once it drops back down to that previous resistance level, which was towards 443, that's where you're going to want to be buying calls, right? So this is where we're at right now. We are towards that previous resistance level that reacted as a support level, and that also reacted as a support level on Friday. But if you look at the chart on the 30-minute, it's forming lower highs. It's looking bearish. And I also showed you a daily pattern where we're supposed to drop first. So it already played out. We're not interested in trading at 443.37. because it already played out. It already worked several times. Now, what you need to understand about this level is it's make or break. If it reacts as a resistance level, they will drop this to 440 to 441. If it reacts as a support level, they will spike this. And the level that they will spike this to, if that does react as support, this would be the next level that we would go up to. You can see right here in terms of the SPY, you had some previous support at 444.26. Once it cracked that support, it almost went back up, but it didn't retest. So if it reacts to support, the next level we will go to is 444.26. They're going to try to have a small drop first, but I'm not too interested in trading at that level as well. But it will try to drop first because previous support is supposed to react as a resistance. The problem is it already nearly played out. If something already nearly plays out, I'm really not too interested in it unless it's at the best level possible to be trading at. So the next level will be 444.26. Now 440.26 reacts to support and it goes bullish and it goes above that. What's the next level we go to? The next level we go to is 445.55. If that reacts as a lower high, we're likely going to see a small little drop first. That is previous support that has not been tested. We will very likely see a small drop once we hit for the first time 445.50. That is a level of interest on mine for doing a very quick super scalp on puts with a super tight stop loss. Do I consider that to be a great setup at an amazing price? Not really. It's towards the middle of the channel. Now, the next level above that is going to be right here, 446.50. Again, this is previous support. This one has been tested and it has been reacted as a resistance. So nothing special, but that's the next level. The next level above that is going to be right here, 447. Now, when we get to 447, we will likely see a drop first. We will likely see a small drop. They will likely turn that previous support into a resistance level, into a lower high. That would be one level heading into this week, would be 447, level of interest for puts. Now, what is above that? The next level above that, and this is what you need to understand, it's going to be very, very special. 447 to 447.40. This is a zone. At first, they're going to try to turn it into resistance. Now, if it breaks out and reacts to support, this is what's going to happen. It's going to have a gap breakout. A gap breakout is a breakout that has no resistance level. You can visually see the SPY ended up gapping down right here. It had a massive gap down from our key level where we were interested in and where we were doing puts. So if it breaks above this red line towards above 447 and they're forming a floor, they're forming a support, you can see the SPY is supposed to go super bullish and it's going to start to fill the gap at 450.30. So what you need to understand is this is make or break. 447.70 to like 447.30 is your make or break zone. If it reacts as a resistance, we start to pull back a little bit. Now, at some point, when they do turn that into support and you see a floor, it is going to rocket and it is going to start to fill the gap. So at first, they're going to try to drop it. And then at some point, whenever it decides it wants to react and confirm as a floor, as a support, they're going to start to spike it and it's going to start to go up rapid fire and fill the gap. And if you're wondering, well, how fast does it fill the gap? How fast these things happen? It's on the 30-minute chart. The 30-minute chart is going to give you an estimation on how quickly price is going to move on where it needs to go. In this situation, it took, about 2 hours to fill the gap. So that's an estimation, right? Now, this would be the true best level for puts. This is the level, whenever it wants to hit, where you should make back the entire cost of Trader Society, one-time fee, what I charge to join the program, right? 450.30. That is your best level possible to buy put options. Just like I told you at the 451 gap, we have a new gap slightly under at 450.36. That is my best level for puts. So basically, this is what I can really tell you in terms of the true best levels. 440, 441, for interesting calls, also the 437.50 calls, right? 447 and 450 put zone. Now, when 447 reacts to support, you can do a call zone, but it's super tight stop because it's at a higher level. It's not a good level for calls, but when it does react to support, it's going to go bullish to try to fill the gap. Those are best levels. All the other levels are just basic price ladder levels. They're nothing special. There's nothing great about them. If I see a strong confirmation or a strong pattern, since I'm a professional, I will show some interest in making a quick scalp, but I know it's not the best setup at the best price. Those are the best setups at the best prices. I gave them to you. You need to try your best to trade them to your best ability possible. See if there's some sort of confirmation. Use the 30-minute chart. Use the 1-minute chart. If you want, you can use the 5-minute chart as well. I've heard great things about the 5-minute chart. I personally don't use it. I just use the 1-minute, the 30-minute, and the daily chart. I'm sure the 5-minute chart is great as well. But that's what you need to understand, guys. You just need to be disciplined, wait to trade the best setups, best prices, and you need to understand we are setting up for a highly predictable, phenomenal trading week. But you must be disciplined. You must lock in your gains quickly. You must cut your losers very, very quickly, within seconds to minutes. If you want to create an edge, imagine if you cut your loss so quickly, within a minute to 2 minutes. You would then start to create an edge, and you would then hate losing because you're getting stopped out so quickly. So you're going to start to see all these small, tiny things, and you're going to start to build an edge and build a unique scalping strategy where you're always making money for the vast majority of the time because you know the tricks that they're playing. You know how you're getting stopped out now because you're looking at the smaller stuff. You know how to create an edge because you're trading on such a small scale, such a small time frame, right? And that's the beauty of scalping, man. You can create a very unique edge scalping short-term expirations because people don't look at that small stuff and they don't have a strategy for that small stuff, right? They don't understand where to enter at other people's stop losses. They don't understand where it's actually a good time to be adding instead of getting out. There's so much to it, man. Scalping is truly the best and the most predictable. I absolutely love it. It's changed my life. But I'm going to leave it up at that, man. That's how you trade the best setups to this prices. We will absolutely crush it this week. I am telling you, if you are not in Trader Society, get in the program. We are going to have an amazing week. We have an amazing plan, lined up, and we will crush it. It is the first link down below in the description. I will see you guys within the chat from here. I will see you guys tomorrow live towards market open. We will absolutely crush this market. The game plan is going to be 100% spot on. I will crush it. Going for my 11th green day in a row. If you are serious about investing into yourself and surrounding yourself with a serious network who is making money, every single week. The moderators, man, tens of thousands of dollars, some of them $100,000 in one single week. If you're serious about surrounding yourself with the right network, the right information, the right trading strategies, if you want to learn how to master day trading, scalping, swing trading, this is going to be the right group for you. It's the first link down below in the description. It's a one-time fee. It is lifetime access. The results that we are getting is life-changing. And I can assure you, if you join this program, you're going to absolutely love it. It is the first link down below in the description. I will see you guys till then. I'm going to be signing off now.